Good afternoon, ladies and gentlemen. We hope everyone is well and in good health. Thank you for joining Ecoworld Malaysia virtual annual general meeting. In view of the ongoing COVID-19 pandemic, once again, we are not able to hold our AGM at our sales gallery and meet you, our shareholders, in person. However, I'm sure everyone has adapted well to the new norm of virtual meetings in the comfort of your own home or office. Let us begin with the sales and operations update before we go into the financial review for financial year 2020 and our aspirations for financial year 2021. Ecover Malaysia achieved RM2.3 billion sales in financial year 2020, exceeding our sales target of RM2 billion by 15%. More than 3,200 units were sold in financial year 2020. Projects from Eco Central contributed 68% of total sales, with RM1.55 billion sold, followed by Eco South, which contributed 26% of total sales with RM608 million, and Eco North, which contributed 6% of total sales with RM139 million. During the first quarter of financial year 2020, we recorded 305 million sales. This was followed by a very quiet second quarter due to the sudden announcement of the MCO in March, which required our sales galleries to be closed for approximately 2 months until the start of May 2020. As a result, we only achieved sales of 333 million in the first half of financial year 2020. In the second half of the financial year, we saw a huge resurgence in buying interest. Our team's hard work from home throughout the MCO to actively engage with prospective customers online and through social media platforms enabled us to close 2 billion in sales. The reintroduction of the home ownership campaign by the government also helped reignite buying interest. We are particularly encouraged that this strong buying momentum has continued into the first 4 months of financial year 2021, because November to February are typically quieter months for property sales. The 911 million locked in to date has certainly given us a good start to the new financial year. Whilst challenges caused by the pandemic remain, we believe that strategic transformation of our business to embrace digitalization over the last 5 years, coupled with continued product innovation, will stand us in good stead as we work hard to achieve the 25% higher sales target of 2.875 billion set for financial year 2021. Since 2015, we have been steadily expanding our portfolio with increasing focus on meeting the housing needs of the young and first-time home buyers, both from a product and pricing standpoint. Today, we have a wide range of homes priced below 400,000 in the case of apartments and from 500,000 to 800,000 for landed homes. As a result, 70% of our customers are now below 40 years old, and through our You Belong campaign, we have managed to communicate to aspiring homeowners that we have ideal products for every demographic group and to suit every lifestyle need. The ongoing COVID-19 pandemic has also transformed the way we all live. A home today needs to be many things. Beyond being a place to stay, it must be able to function as an office, a school for the kids, and provide a conducive environment for rest and relaxation after a hard day's work. At Ecoworld, each and every project and every product is designed with the Ecoworld DNA in mind, which encompasses the living and working environments created, design of individual homes, accessibility of our projects, and presence of comprehensive amenities within a 10-kilometer radius. Our living spaces are also designed to be flexible, which have enabled us to quickly adapt to meet the many varied needs of home buyers in the post-pandemic world. These efforts have contributed significantly to the sales results achieved. Among our first products priced below 300,000 are the Charisma apartments, which were launched at Eco Majestic in 2016. Completed in January 2019, Charisma offered 750 units of 3-bedroom and 2-bathroom apartments, measuring 800 square feet. This project stands out for its sustainable design and ease of maintenance. The minimalist concept and approach further extend to the project amenities and landscape with no compromise on the aesthetics. Facilities include a swimming pool, multi-purpose court, surau, gymnasium, and other amenities set in an ambience that gives no hint of the apartment's highly affordable pricing. Charisma apartment at Eco Majestic won the Ecover Malaysia Editor's Choice Award for Outstanding Affordable Homes Project 2020 and it also emerged as a winner in the Sustainable Affordable Housing category of AgeProp Malaysia's Best Managed and Sustainable Property Awards 2020. Last year during the AGM, we shared that we will be launching a new brand offering a fresh take on vertical township living. We are happy to report that in September 2020, we officially launched our Noodle brand at Eco Gardens and Eco Sanctuary. More than 1,000 units of the semi-furnished Huni and surround service apartments were sold within 3 months from the initial launch. Young people in particular were really drawn to the lifestyle promise of the brand, the affordable price point, and the location of the homes within these two matured Ecoworld townships with their great infrastructure, outstanding built environments, and comprehensive amenities in place to serve residents. Our team's creativity in product design can also be seen in the Ergo Homes, launched by Ecoforest. Offering an L-shaped layout that comes with a 15-feet private garden, each unit feels like a corner unit with efficient space planning and integrated communal zones designed to suit every lifestyle. The first phase of the Ergo Homes is fully sold, and we are planning to launch phase 2 shortly. We also introduced an innovative new product, Co-Homes, which will be launched in financial year 2021 at Eco Grandeur in Selangor and Eco Horizon in Penang. Designed to look like a 35-feet wide terrace house with the best of both apartment and landed home features. Each co-home is around 1,000 square feet in size, with 3 bedrooms, 2 bathrooms, and 2 car parks. The concept encourages multi-generational living, where parents can own the ground floor, with adult children or siblings owning the first floor units, or whichever arrangement best suits them for both privacy and closeness. With prices starting at around 400,000, co-homes are very affordable, starter homes for young couples or even empty nesters who wish for a smaller space but do not like high-rise living. We recently completed the acquisition of 200 acres right next to Eco Botanic, which will be developed into a mixed residential township known as Eco Botanic 2, catered for first-time home buyers. Located in Iskandar Puteri, right opposite Edu City at the heart of Iskandar, Malaysia, this project has excellent connectivity with ample amenities such as universities, schools, healthcare centres, and business hubs in the vicinity. Our landed double-storey homes at Eco Botanic 2 will be priced from 500,000 to 800,000. Interest from customers keen to be owner-occupiers have been overwhelming to date, and we expect the upcoming launch in second quarter 2021 will be very well taken up. We are also very proud of the progress achieved at Bukit Bintang City Centre, our joint venture project with UDA and EPF. If you drive past the area in town, you will notice the scale of the properties nearing completion. BBCC is set to change the KL city skyline. 2021 will see the completion and opening of the Mitsui Lalaport Lifestyle Mall, the first in Southeast Asia, the Malaysian Grand Bazaar, offering a great showcase of Malaysian artisanal products, art and cultural experiences, as well as Sony Music's Zap Hall. This will be followed by the handing over of 2 residential towers, Lucentia 1 and 2, and the Strike Strata office tower. We also plan to introduce BBCC's latest phase, Swang House, in financial year 2021 with studio, 1, 2, and 3 bedroom service apartments, perfect for young urbanites. Do look out for its launch, as this product suits first-time homeowners and investors keen to own a city centre unit. Apart from our townships and other residential focused projects, Ecoworld Malaysia has a sizable presence in the industrial park segment. In total, we have approximately 1,760 acres of land with a combined gross development value of 9.5 billion, dedicated for the development of 4 business parks located in Senai, Tebrau, and Pasir Gudang in Iskandar, Malaysia, as well as Puncak Alam in Selangor. In the second half of financial year 2020, our business parks increased sales by 193% from third quarter of financial year 2020 to fourth quarter of financial year 2020. One of the highlights is a notable deal secured in August 2020 when we sold a parcel of industrial land in Selangor to Bao Steel, a Chinese state-owned industrialist, for 53 million. We were also pleased to note that demand for industrial assets from local industrialists has been very robust. In particular, the shift in consumer behavior towards online purchasing has accelerated the growth of e-retailing businesses leading to an increased demand for logistics and warehousing spaces. This segment is expected to remain strong in 2021 and should pick up further once borders reopen, allowing the entry of foreign investors. Now, I would like to give you a brief update on Ecover International, which is 27% owned by Ecoworld Malaysia. Ecover International, which has projects mainly in the UK and also Australia, experienced steady sales throughout financial year 2020, notwithstanding the COVID-19 pandemic. Its full year sales of 1.4 billion was 25% higher than the sales achieved in financial year 2019, despite the challenging market conditions and the disruption to marketing plans in all of its key markets due to COVID-19. The positive sales momentum continued from November to February 2021, with more than 400 million sales recorded in the first 4 months of financial year 2021. Ecover International's substantially stronger sales in financial year 2020 reaffirms London's position as the foremost property investment destination for global investors. For financial year 2021, the Board of Directors of Ecover International has set a sales target of 2.2 billion, taking into account the gradual global economic recovery and expected improvement in market sentiment. These next few slides provide a quick glimpse of some of Ecover International's completed and ongoing projects in London, Sydney and Melbourne. With more than 4,000 residential units already handed over to purchasers, coupled with the ongoing handover of Wardian London and Yarra One, Ecover International expects to generate a significant amount of funds in financial year 2021. Accordingly, it has recently declared its maiden dividend, and as the 27% equity owner, Ecover Malaysia will be receiving dividends from Ecover International in FY 2021, which will add to the group's cash flow. We turn now to Ecover Malaysia's financial performance in FY 2020. The group recorded revenue and gross profit of 2 billion and 267 million, representing a year-on-year decrease of 19% and 43% respectively. The lower revenue was mainly due to reduced sales during the MCO period and the cessation of construction activities on project sites from 18 March until mid-June 2020, which slowed down the progress billings process. Gross profits fell by a larger percentage, mainly due to a decision taken to write down inventories, totaling 99 million. To cushion the impact of the write-down, the group undertook a detailed review of our overall cost structure, and along with operational efficiencies gained by digitalizing our customer-facing back office as well as support processes, we were able to achieve total cost savings in selling, marketing and administrative expenses of more than 80 million in FY 2020 as compared to FY 2019. As a result, Ecover Malaysia was able to continue to record a relatively decent net profit of 135 million for FY 2020. More importantly, the reset of our cost structure will further improve our competitiveness going forward. Our future revenue position also remains high at 3.7 billion as at 31st October 2020, thanks to the sustained recovery in sales experienced throughout the second half of FY 2020. This will provide both earnings, visibility and cash flow certainty over the next 2 to 3 years. Our efforts to strengthen our balance sheet are also showing good progress. Total borrowings continued to reduce by 466 million with steady repayments of loans and project financing. With the reduction in borrowings and increase in shareholders' fund, Ecover Malaysia's net gearing, which has been on a downward trend since FY 2018, continued to drop further from 0.7 times as at 31st October 2019 to 0.61 times as at 31st October 2020. Based on the good results achieved, the Board of Directors of Ecover Malaysia was able to declare a maiden interim dividend of 2 cents per share for FY 2020, which have been paid to our shareholders in February 2021. We are pleased to inform shareholders that Ecover Malaysia was included in the FTSE for Good Bursa Malaysia Index in December 2020. We are very heartened that our efforts on the environmental, social and governance front have been recognized in this manner. This honor will definitely spur us on to further embed sustainability as an integral part of our business strategy and in the day-to-day operations of the group. In closing, I would like to thank all our shareholders for your continued faith in us. Although FY 2020 was a very difficult year, it has also been a rewarding one in many aspects. There were many challenges faced which we managed to overcome as a team, and necessary adjustments have been made during the year to ensure that we will not just survive but emerge stronger post-pandemic. Coupled with the right products and strategies in place, we are confident that Ecoworld is well positioned to be able to overcome current market challenges and reinforce our path towards sustainable growth in the years to come. Stay safe everyone, and we hope to see you soon.